Why is my mic not on? That was weird. None of my stuff was on. Good morning, StockTwits crew. Happy Monday. Hope everybody's having a great morning so far and a great weekend. Gosh, what a crazy week we had last week, especially Friday. A bit of a nasty day in the markets. I caught a great short and left pretty early, and then watched that short turn into a massive position. Wish I held on to that one, but Shy, we had a crazy week last week. How we feeling about coming into the market this morning?
I mean, those last week was the type of week that I love as a long-term investor because we got some fire sales, not fire sales, but we got some movement towards potential accumulation zones. And there's also certain names that I was actually adding last week. Like it's been a while since I've got to like beef up some of the positions I've been wanting to, especially the higher conviction ones who are going through a macro-driven pullback. Nothing thesis breaking, and my cash position went from 12% to 10%, now 9%. So I am slowly using that my soldiers a bit, and that's exactly what I want to see. And it's been a while. Like every month, I add 1 to 2% cash position in my account. Fortunately enough, I'm in a position to do so. Haven't really been adding in 3 to 4 months, so the cash position is now kind of my biggest position in my portfolio, and I was like, I don't like that at all. I'm a, I think I'm a perma bull essentially, especially in an AI revolution, the fourth industrial revolution we're experiencing right now. So now we're getting some more like volatility. Indices might be down 3% from the previous highs, but like a lot of the stocks are down 20 to 30%. Like I made a post about it this over the weekend where it's I'm pulling it up right now. Some like popular FinTwit names are just like down significantly. We have IonQ down 40% from the previous high. We got Tesla down 30% from the previous high. We got Rock Lab down 25%. We got Robinhood down 21%. Palantir down 20%.
Hey, we
Arm
saw what
Holdings
happened the last time Tesla was down 30% on the year. That's all I'm going to say. It
exactly.
was
So like
last year.
I think this is a short, maybe some short-term profiting. Maybe it's just like some wooziness on potential tariffs. Either way, I think we're in the early innings of an AI thematic. So like you just got 30 to 40% discount essentially on what a future you got to see on the one person commented on this in my posts on X, and I loved it. The future is on sale. That's exactly what I'm trying to. That's what I'm like. The ethos of this pullback is like all these names. They're all the part of a larger thematic that's high, have a ton of runway that's just getting started. You got quantum computing, nuclear energy, AI, space, healthcare AI. Um, Robin is essentially flipping the fintech narrative upside down by being the full ecosystem, almost like I don't know, they're becoming this tech firm inside a fintech thematic, which I didn't think was possible. Like, there's just the future is on sale a bit right now. I'm not saying like use all your cash position to buy this dip, but I just told you I went from 12% to 9%. I'm slowly adding. It's a DCA plan, so that's my strategy.
And something you'll notice just about all the names you're talking about in your post here is like none of them are down like 2%, 3%. They're all, names that are like, oh, they're really getting a nice pullback, right? The indices might be down like 2 to 3%, but these names that you're adding into, right? They're down, they're taking a nice hit, which is a good thing in my opinion. Like you say, futures on sale. I love that. And I kind of look at the entire market as that, you know what I mean, talking about the S&P and Qs. I mean, every time we get a big market crash or market crash, I quote with my fingers and big dips in the market. You know what I mean? That's exactly how I look at it. As the future is on sale, let's pick it up. Let's pick up a little bit at least. That's why I always want to have gunpowder on the sidelines because I mean, if you don't and you're fully invested at highs and then you do get these dips, it's just you can't take advantage of it at all. You got to sit through that, and that can be really tough. So. We got some pre-market earnings going on. Domino's Pizza, you see that, Shy? Down a little over 5% right now. Ooh, and continuing to drop.
Did they miss on
Um,
earnings? Was it like a dividend cut?
let's see earnings. Yeah, double miss. Looks like revenue missed by 1.77%. EPS missed by 0.20%. So yeah,
Oof.
not looking good on the charts right now. We're coming. I would expect with this move, I expect Domino's to come into those 419, 420 lows there, just under 420, We have a big daily low there. I'd be watching for that to be like the next spot, but really, you get through those, I think it's right back down to the bottom of the range of 390, 400 there. Um, I don't know. What do you think about Domino, Shy?
Definitely not my lane, but I think if if they miss, like that's a double miss, and they don't really have a narrative to justify double miss. Maybe it's tariffs. I don't know. Like I don't know where they get their sauce from or whatnot, but or ingredients. Like this has been a common trend recently where I know Domino's is very different than Walmart. I'm not saying that they're similar, but there's been misses this cycle, and it's really correlated with the strong dollar and potential tariffs. So I do believe that it's a little worrisome, but for me, like I'm the wrong person to ask about Domino's. I'm just like, why own Domino's when we're in a fourth industrial revolution right now?
Yeah, I'm with you 100%. I'm totally with you. Hey, but I'll never knock, like, throwing a little percentage of a portfolio at anything. I'll never knock it. But, Domino's Pizza is a tough one for me to get on board with. We got Berkshire.B as well. They came out with earnings. Looks like they beat, what was that? They beat earnings 45% on the EPS, 2.99% on the revenue there. So, Berkshire looking good. Honestly, not too big of a move though. Just from those Friday lows, we're basically back to Friday highs here. So, and that might seem like a big move if you're looking at the market, but compared to Berkshire, we really didn't drop much on Friday. So, not up a crazy amount, but definitely looking good. What you got thoughts on Berkshire, Shy? I feel like that's more your lane.
Yeah, I think I don't know. He's doing something. They are just building a
You keep seeing
fat
posts all
cash
the time about it
stash.
too on your timeline over and over. I'm constantly seeing it. I don't know about you.
No, me too. It's just like they're preparing for D-Days, feels like. And you have to ask themselves like why? Why is that? Because he's again, first off, he's not a tech investor. So like if we're in a fourth industrial revolution, he would never participate. That's not in their DNA. I know like he used to own a Snowflake. They divested those their shares in Snowflake. Like that probably wasn't him, it was someone in his firm. They own Apple. Apple really isn't, you can call them tech, they are tech, but like really they're consumer based. They're probably the most consumer based tech out there.
Look at that cash
But
pile. Oh my gosh.
valuation matters a lot to them. And valuation outside of AI, including AI as well, like it's just not cheap. It's historically the most expensive it's been in a while. So like he's probably preparing. I don't know. It's a great argument because I'm part. There's Camp A. We're about to hit the roaring 20s. We're gonna have so much tech revolution, AI, quantum, physical AI, robotics, etc., space, and then there's other camp of valuations really extended, and there needs to be a dead couple years in order for the valuation to catch up. So I think their firm is clearly participating in the dead couple years. There's not enough deals out there, so it's slightly worrisome. I will say that because he is the Omaha, like he is a goat for a reason, and he's doubling and tripling and quadrupling down on building that cash position.
Yeah, 100%. And something I'm just noticing looking at the chart too. When you look, I mean, it can be a little unclear when even if you're looking at a weekly or a daily, but you bump it up to a monthly and it's just like even as high as it is, obviously it's hard for me to look at a chart like this and be like, "Oh my gosh, I want to buy here," right? But I see nothing about this that looks bad. This consolidation that we're in, I mean, it's held very well. You've heard the term, don't short a dull market. That's exactly what Berkshire looks like. A little bit different than the general markets right now, but Berkshire I would have no reason to be selling or trying to get short this name. It looks like it wants to break out on the monthly, so love to see that. Now let's get into what's happening this week. Yeah, so we got Monday earnings. We got Hims, Riot, Zoom. That's all tonight, I assume. Yeah. That's all gonna be tonight. So, gonna be keeping an eye on those Hims. I know that's right up your alley, Shy. I know we're both kind of bearish on Hims right now, but they've been ripping it, man. They've been absolutely killing it. They're coming in a bit now, down to 47.87 in the pre-market here. Looks like we're kind of just back testing that previous consolidation before that big pump we got recently into the earnings. But curious on your thoughts here, sitting right at $50. Is Hims a steal or is Hims overvalued here?
All right, you guys all know my long term perspective on him. Let's talk short term. The stock's up 105% year to date. So like, I think they're above a 10 billion market cap. Uh, they went from undervalued to, I'd make the argument, fairly valued now. I know last quarter they saw the revenue growth reaccelerate above 70%. That like was a huge beat, even like surpassing a lot of the most bullish observers out there. But that was riding on the explosive popularity of compounded GLP-1 medication. So if those are going away because of that new shortage issue, what was that? Let me see what that was. Yeah, the FDA decision changing to no longer be a shortage for those GLP-1 compounds. Like that might be somewhat of a headwind on the stock because those GLP revenues that cause them to like easily beat last quarter, like that might be going away soon. If that does go away, I do think it's going to cause some near-term headwinds because that was the fuel that pushed them to beat last quarter or exceed expectations. And I think this like narrative on Amazon just like going to eat their lunch is always going to be there. It just makes too much sense. Where you're seeing Amazon clearly double down on the telehealth space, and the synergy just makes too much sense when essentially the whole world is a Prime member almost. Like I don't know who isn't. It's maybe I'm just in a
That's
bubble,
another
but
thing. If they're going to step into the space and they already have everybody on Prime, I mean, how easy is it going to be for them to just eat up the entire market? You know what I mean? And that's where short term, it's like it's kind of like Uber in a way. I kind of look at it, Shy, where it's like, Uber. Long term, I don't want a part of it anymore, but I understand that over the short term here, we can definitely see some positivity, and I feel like it's kind of the similar thing with Hims until Amazon really like steps in and says, no, we own this space now, and we're taking over, and I think that time will come. I'm with you, but in the meantime, I mean, some great trades have been happening. I've had a lot of people in my live stream chat hitting some great trades on it, so love to see it there. I know we got some other earnings tonight as well. Well, real quick, Hims is looking for $470 million revenue. They're looking for 10-cent EPS for the earnings tonight. We also got Zoom. They'll be reporting. I'm not too interested in Zoom. I feel like Zoom's time is kind of over. It was COVID time. I feel like it's really been extremely quiet since then. We've got a little bit of a pump, like over this past year. But other than that, I mean, not really doing a whole lot. We've been really quiet and sideways, consolidating. It looks healthy in this consolidation after the move up, but just not super exciting for me. Not a name I'm watching very often. I don't know about you, Shy. But we got
it's
Tempest
a
too.
dead company.
Yeah, it's dead.
Zoom's
I mean, I use the platform like every day, but I mean, the
that's
stock is just dead, man.
that's why it's like it's so important for like the listeners to understand like there's a difference from a great stock and a great company.
Yeah.
Zoom is a great company. Everyone uses their product, but it's a commodity of a product. It doesn't take too much effort to create a similar video feature. It really doesn't. And the ecosystem offerings that Zoom is trying to double down on isn't enticing enough to pay that premium where if you have Teams, you can get great video quality and get a bunch of other Outlook, um, PowerPoint, Excel. Like that's an ecosystem. Like it, it's so easy to add that video feature into an existing ecosystem. Where Zoom, they just didn't. Maybe they didn't capitalize on it quickly enough, or they just don't have an ecosystem around a commodity of a product. That's their issue. But they're too expensive to get acquired, and also, who wants to spend billions of dollars acquiring a Zoom when it's a commodity of a product? I've always said that Zoom needed to pivot away from B2B or business to consumers to purely go in the college space. Like if they just own that college space, that is somewhat of an exciting enough. It's like a good enough niche, and that's something they just maybe I haven't checked on the past year or two, but like maybe they're doing that. But like, if they own that college space, like there's a lot of benefits on partnerships then because a lot of companies will be willing to partner with Zoom because they own this college space and these companies want that targeted audience, that demo. That's like maybe an angle for Zoom if you're a commodity of a product is have somewhat of an advantage via partnerships. I don't think they did that, and I think that was a misstep. That's what they needed to do. So
Yeah.
Either way, Zoom's just going to be a financial engineering company buying back shares, being just in that gray area, not moving much.
Yeah, tomorrow we got some more earnings as well. I'm keeping my eye on HD, but we got some memes, some AMC, Lucid's in there. God, I used to trade that stock every day, and now that stock is just horrible. Oh my gosh, I used to day trade. It used to, believe it or not, it used to be great day trader stock with shares, and now it's just absolutely horrible. We got Kava. That'll be fun to watch. I'm always interested in Kava, even though I actually don't own any, but always love to see that. FSLR. I feel like that's going to be a fun one, Shy, with solar lately. I know we've talked
Hmm.
solar a little bit, and that if you're believing in the space, First Solar is definitely the place to be. What are they? Let's see. They're looking for $1.48 billion revenue and $4.78 on the EPS. What are your thoughts for this upcoming earnings there?
It's going to be ugly, but you have to ask yourself what's being priced in. So, a good report can maybe have that balance. They are at a very clear support. So, if a good enough report takes them there, like I do, I do think that First Solar's business. The reason First Solar is my go-to solar name is because the structure of their deals. It's large industrial deals that are not just a couple years. It's like long term, like years and years that really won't get affected too much by a Trump-led presidency taking those IRA tax credits away. Like it's going to be impacting their new business flow, but it's not going to be that much of a needle mover, unlike a Enphase Energy or Solar Edge, which has that residential experience exposure. So like this is purely industrial, and although we're getting some commentary over the weekend on data centers, like Microsoft canceling leases of data centers, like the inevitability of data centers is there needs to be an alternative energy source. So First Solar would do just fine long term. It's just it might be dead money, and that's why it's kind of hovering in the zone where I could see them just being between 150 to 200 for years. I really could, just because there isn't a catalyst really, especially when you're seeing this data center narrative of it's going to be pausing a bit or maybe it's near its peak, and Trump's could care less about solar and wind. I do like he's. I think nuclear energy is definitely taking a lot of spotlight that's um, solar used to have, and that's also going to be somewhat of a headwind. Like it's just tricky time to be in solar. It's too much of a headache. I put it in the bucket of like why bother.
Yeah, I'm with you. G from the chat said Zoom looks good. I'm with you, man. When you bump up that time frame, it doesn't look bad here, but at the same time, we're just in a range where you could continue to see this go sideways for a while. And again, when you're not like I don't know, when you're not a name that's like as big in growth or innovation as something as like some of these other names we talk about daily, it's just tough for me to like get on board and want to go long, even if it looks good. You know what I mean? It's like okay, looks good, but what's really behind under the covers? You know what I mean? And for me, it's just nothing right now. So that's where it's tough, and I don't think it looks bad though. It's just tough for me to want to join. We got plenty of data this week. S&P K Schiller Home Price Index tomorrow morning. New home sales Wednesday. Jobless claims Thursday. GDP. That'll be fun. We got PCE Friday, so plenty of data to watch out for this week. Do you have anything specific you're looking for on any of those data points, Shy, with GDP, PCE?
It's just gonna be Nvidia earnings. I don't think
Yeah.
anything matters after that. I think even if Nvidia delivers, doesn't matter what print we get the day next day. That's gonna be hot. Like it's all gonna be Nvidia. The reaction to Nvidia. So it's like not even what they report their earnings on. It's literally going to be people's reaction to the print or what their guide's going to be, and that's super unpredictable. Like if you look at it, it hasn't dipped too much from its all-time highs, and if they disappoint, it's going to be the first one in a while on them disappointing. It could just cause. I know every quarter, people say like Nvidia's earnings are the most important prints in their history. I I'm sorry, but I do think this upcoming one is vital. It's kind of big, and it's not just because we had our first bloody week in the markets in a while. It's because there is some real FUD associated with AI right now, especially in the data centers, like real. Like there hasn't been a DeepSeek playbook review in the past couple of years where AI tools and training data is going to become cheap. They just give you the pathway of how cheap it can become, and I think it validated the thesis that data centers will be a commodity, and LLMs will be a commodity. And you're also seeing a lot of commentary from like Microsoft CEO on them canceling data center leases, making like all big tech make commentary of like quarter to quarter like was flat on capex. Like there's no more incremental increase. That's new. Like there's just so much more FUD now. It's correlated with the Nvidia earnings that it's dangerous a bit. And I made a post over the weekend over here. You can see where I think they're going to dominate their print. Like I think they're going to report great numbers, but it's going to be a very similar to an Astera Lab situation, A Lab, for example, where they produce great numbers, but their business economics showed a slight decrease in sequential growth, even though they grew more than 160% year over year. That might be the thing about Nvidia, where you see them beat, but you're seeing their margin of beat diminishing, and people are going to focus on, oh, it's getting. You can see the level of delta on the beat is getting lower and lower,
Oh, you'll
and
see
you're
the freak out. You've seen the freak out with tariffs already. If Nvidia comes out, investors are gonna go nuts. So yeah, I'm with you, Shy. This is gonna be a fun print.
that's the thing, and like I do think there is obviously some constraint that's going around right now that might affect Nvidia's like guide. You saw it in cross big tech, and you're over here TSM. They're like TSM now is committed over 150% ramp in their COWS capacity through next year. That is that's calming some of the heartburn because there's going to be some. That's a clear scaling effort to unleash like the tap revenue that Nvidia hasn't been able to do because of that constraint issues. Like that could be maybe the not the Hail Mary, but the saving grace on their earnings. But I think they're going to report really strong numbers. It's all going to be the narrative around that print. And I think the narrative does risk downside than upside. And that is okay because you've seen the past couple years' performance. Like if they finish red after that print, doesn't mean that their mode or advantage is diminishing. It's quite the opposite. It's expanding. 2 years ago, 3 years ago, I really didn't know if Nvidia can insert themselves into AI permanence. I really didn't. I thought it was a very cyclical. The cyclical exposure was going to hurt them in the GPU space and the hardware space. But now I'm extremely, extremely confident that they exerted themselves into AI permanence because of their CUDA platform. So in their which is their software angle in their ecosystem. So like they're going to be just fine because we still have physical AI, we still have quantum computing as the next frontiers, as the AI, and their CUDA platform will be the kingpin of those thematics as well, just like it was in AI. But there might be some like weird middle, like the S curve is what I love to reference on NVIDIA, where we might be at that middle of that S curve right now, and nobody really knows when that's going to occur. And there's going to be one quarter where it shows it's happening. And I think everyone loves to front run. It's going to happen this upcoming quarter. It's going to happen this upcoming quarter. Eventually, they're going to be right. I don't know if it's going to be this quarter or not, but I can tell you that the FUD narrative is the most compelling it's been in quite some time entering an NVIDIA print. And that's why I'm like being a little defensive where I'm not adding too much today or tomorrow because let's just say it is that quarter. There's going to be some insane sell-offs, especially in the
Bring
semiconductor
the
space.
blood. Ace wants the
Exactly.
blood, man. I
You
want it.
want that dry powder ready though when that occurs. And that's when opportunities arise. That's when the future is on sale. That's when you want to add. And Astera Labs is a perfect example on that niche within the semiconductor ecosystems only started getting started. It's only gaining more popularity. That an Nvidia weakness is going to drive the whole in semiconductor space down. All of them. There's not going to be any green pockets at all. But there's going to be some offsides on which stocks should be going down that print. Astera Labs is one of them. Same with Broadcom. Same with Marvell. So like, I'm going to take advantage of those dips if that occurs, and I'm just being patient with it. Like that's why I'm learning a lot. Patience as the past couple of years. Like I don't need to buy every single dip, even though it might be a V-shaped recovery. I just don't need to offload all my soldiers right away.
Are you taking any interest in Taiwan Semi? Somebody from the chat was
I
wondering
love TSM. I think
wondering on the long term hold there because I know you like TSM and they hold they were saying they hold that in Nvidia, so looks good right now too. It's on a bit of a dip coming into the bottom of this range, really just consolidating and been quiet, but $200 right under. How we feeling about that, Shy?
I mean, I do think it's pricey right now.
Yeah, it seems like it a little bit. We could use a dip.
I will say though they're de-risking themselves from that geopolitical risk with a lot of the American AI projects and initiatives. Like the Arizona plant is just starting mass production for Apple, the Apple's newest chips. Like that's huge. Like once that gains more and more momentum, there's going to be less of a geopolitical multiple compression associated with this name because that's always been the case for TSM. Like they haven't fairly valued because you just never know when China's going to invade Taiwan. And when that occurs, sell everything, guys. Like just go all cash because it's going to get ugly. And that TSM like multiple has always been affected by that. And now you're seeing like the Arizona plants. You're seeing Trump trying to, or the Trump cabin just try to push towards helping Intel out in their foundry because we need less exposure to what's happening on the East. TSM is a great partner for that, and they're pushing it for it. Same with Broadcom. So like the geopolitical risk is diminishing. I just I don't see that much of a case right now getting into TSM at $200 because of opportunity costs. That's the only reason. But if you want exposure to the semiconductor space and you want three just safe stocks that are just gonna be in permanence for any tech revolution going forward, it's clearly Nvidia, TSM, and ASML. Those are the three best names that just headache free, own. We're good. We're absolutely good. So that's my take on TSM. Like, I congrats if you got in 2 years ago. Clearly, it's one of those names where it's a safe haven. It's a beach stock, and geopolitical tension risk pushed me away from it, and that's on me. But it's a great stock to own.
Yeah, somebody's asking about PLTR as well, wondering if there's a mean reversion there. I don't know. I was looking at PLTR on Friday. They actually, or no, sorry, on Thursday when we got down to that gap. I was thinking we were going to try and fill that gap, but you saw buyers
Ooh,
step in
it's
right when we
6%
took
now.
that low. Yeah, and now we're back in that gap now. So I have a 50% retracement on the gap. I think we'd come into that $91.79 area. That's 50% retracement. Gap rules say. I mean, if we break into the gap, it's 50% retracement first, and then we go for the full gap fill. So full gap fill will be down to that 85.30 area. I don't think that's out of the question at all, especially seeing this morning you're coming right back into that 95. If we were holding that level that we tried to sweep on Thursday, which is 99.32, I would have been a little more positive thinking about PLTR, maybe trying to back test some of those areas we ran through earlier in the week. But as of now, I mean, we're seeing continued downside. You're already below Thursday's low, so that low that we did make, where I thought we were sweeping a little bit of price, ended up, and we're just getting ran through that. So I definitely think we end up seeing $91.79, and then potentially even lower into that gap fill. We'll see how nasty it can get. But overall, I mean, not a massive dip for PLTRs, just from the highs, right? If you're buying at $120, you're definitely feeling this dip down to $100. But I really don't think this is too much. Yeah, we could come all the way down to 63.40 in my opinion. Come sweep those lows and still be totally fine to the upside. I would actually love to see that on PLTR if we do get this gap fill, but got to start with the gap first. You got any more thoughts on PLTR,
You
Shy?
nailed it though. Like I've been telling all my subscribers, like $63, $60 to $65 is
Dude,
the
that's
maybe
if
accumulation
big
zone.
dogs want to step in, that's the big daily low. They have to wait till there.
Well,
It's how it
it's
is.
for me
Got it.
specifically. I'm using the August 2024 anchored average VWAP
Mm-hmm.
breakout. So like
That's beautiful. Yeah, I love it.
that's like clearly when it broke out of like, oh, this is when we're gonna have multiple expansion. Like they just validated themselves to stage two AI winner. People bought up that rally big time, institution wise. I'm saying so. It sucks because like it's my number one position. I'm saying it's gonna go down 40% probably, or like that's when I would add more. But I, it's valuations out there, guys, and in those names you have to buy when it's like like really oversold. And to be honest, like even at $60 to $65, like I'd be slow with it. Market just opened. Let's
Oh
see.
yeah, we are open, huh? Yeah, PLTR opening up and going straight towards that 50% retracement. So Definitely, I would expect that. And again, not a bad dip if you're a long-term investor. It's just you can't be buying these highs, right? You got to be careful there. Let's take a look at SPY if my charts can load here. SPY's trying to get a little bit of a gap fill so far. We'll see if that tries to continue. Coin had a nasty day Friday. I don't know if you saw it, Shy. We really got nasty on coin. I was thinking we were, going to go down to that 240 area. If we lost, I had a big area at 252, and we just ended up rugging through that. And now we closed under that 240. So looking a little nasty on coin, but I'm interested to see if they buy any of this up this week. Same thing with like Tesla, too. Oh my gosh, none of my charts are loading. Lordy.
Yeah. Palantir is just continuing. It's at 95 now. That's crazy. Trying to see.
So if you bought at 114 on PLTR, shouldn't you sell and take a loss? I mean, that's for you to decide, right? But
I
I
can't.
mean,
Yeah,
I
we
can tell
cannot
you,
tell you to do that.
I can tell you what I wouldn't be doing, and I would not personally be holding if I personally bought at 114. I just but I also wouldn't have even bought there in the first place. It's not a valid spot for me at all. That's that 114. That's the first real dip you got at all on that Wednesday from last week, and it's not enough for me at all. Especially on a name like PLTR that's been running like it is. I am not going to be quick to buy this. People get caught up with the hype so much. I don't care about the hype. I'll make my money elsewhere. I'm not going to chase something like this. I'll wait for real good prices. So that's my thoughts. Buying at highs, man, it's risky. You got to be careful what you're buying there. Um,
So
let's
New
see.
Bank is rise like one of the few stocks that are actually going up today. Um, they had a pretty ugly earnings report. It's been a ugly one for a while, but I think it was more of a one-time currency headwind, a major one, and you're seeing that reflected today, where it's getting scooped up. And wow, Unity's getting bought up too as well. So Unity's one name that was a really red pre-market.
Yeah,
Uh,
what's up with Unity? What a runner on last week, huh? And then coming in a little bit pre-market. It's getting bought up though. I mean, looking not
well,
looking
it's
bad at all.
you guys have to know like this is a name. Explosive moves, those 5xers, 10xers. I'm not saying Unity's going to be that. Who knows? But they begin from a re-rating. The market re-rates them as they thought that it was this kind of stock, but really it's that kind of stock. And in that process of going from point A to point B, that's when the stock really moves because it's going through a re-rating. I think Unity's going through a re-rating, and it got initiated last week when they went up 30% after one day, after that print, and then on Friday when it was a bloody day for growth stocks, it was green after going up 30% in one day. That was a major tell. There's relative strength in this name. Absolutely deserved because people were writing it off. App Lovin, when you see a stock like App Lovin 10x owning the ad space in mobile gaming, Unity should have participated in that. Absolutely should have. Awful management. Awful management. It's along with Intel on one of the worst corporate governance I've witnessed in quite some time. They have a brand new management suite a year ago, new CTO, new CFO, new CEO, and they're turning the ship around. They cut it's all year last year. They're just like pivoting from what the previous management did towards what they want to be like going forward, and they're doubling down on developer focused initiatives. They're doing the subscription revenue model. They're creating an app loving like product essentially because their ad side of their business is a shit show. And now just like they're doing everything I want them to, and you're seeing that bear fruit now in their earnings report. Even though their guide was much lower, it's because they're being. I will say they're sandbagging. Everyone says they're sandbagging, but when they announced Vector, which is their app loving like competing product, management said on the call it's launching this quarter. None of that revenue is reflected in our guidance. That's a sandbag. That is a sandbag. So this morning, it's down 5% pre-market because they announced a $500 million offering. Oh, that sucks. Dilution, like capitalizing on a really strong print. It's a bad smell for a lot of shareholders who got into the stock after going up 30%. It does suck. I agree. It's a short-term headwind, absolutely. But what did I just highlight in the beginning of this rant I just gone on? Poor corporate governance from the previous management. They accumulated a ton of debts from poor acquisitions, poor strategies on money losing lanes in their business that really wasn't anything focused on what their actual motives or developers at all. So now they're offsetting that with new strong initiatives, but like they have an ugly balance sheet because of what the previous management did. So like this $500 million offering, it does strengthen their balance sheet, which is absolutely needed because it's just not good. It really was not good what previous management did, but it's another example of it's still not over their work that they have to do from the previous management's missteps. And all I know is like the new management is showing everything I want for them to do, and I'd even target their applications focusing on towards industry applications like automotive, retail, etc. So I do think I'm willing to digest a $500 offering if it strengthens their balance sheet, and they told us it's going to be used to pay down debt and also strategic initiatives. I'm like, great, because I view them almost as it's not a SPAC, but it's a brand new company. They're treating themselves as a brand new company, and with that it comes hefty costs, and I'm okay with it. I don't even know what they're doing now, but yeah, they're down 3%. Listen, if you raise $500 million, you're only down 3%. That's a win. So
Yeah, I'm with you. Um,
Palantir's getting bought up, which is interesting as well.
yeah, I see a lot of people in the chat talking about buying dips on things. I'm all for buying dips, but just a little tip: keep an eye on those higher time frame charts. And if you're buying dips, wait until those like wait until you really start to look for those dips until like big range lows get taken. Because guys, these bigger orders in the market, they're not like you're trying. If you're trying to buy in the middle of dead space, like it's just not where big dogs are filling their orders. They can't. They cannot fill their orders where we fill them, right? So waiting for those big range lows to get taken, it's just you're giving yourself the best chance on dips when you're doing that, in my opinion. So I'd really just keep that in mind when you're looking to buy dips on things. If you're nowhere near a range low, in my opinion, like what's the point? Because it's gonna be drawing towards whatever range lows are coming closer, right? And like right now on SPY, the closest range low is February 12th, that Wednesday low. Right now, if I'm a bigger dog in the market, I literally cannot fill any orders until we hit that level, really, for long. Now, now we can see some buying if we get below Friday's low. I'm all for that. But the real range low of where we're at is that Wednesday low, February 12th. So if I know that and I know the biggest orders in the market are not going to get filled until that low's taken, why am I trying to buy the dip at 600, 601? Why? What's the point? If I know, and two, also, psychological levels, we all know that stuff rarely bounces perfectly off the 600. You really think they're just going to take it to 600 to bounce it now? I don't think that. I think that's too easy. I think let's take it to that previous range low, 598.50. Everybody that's buying at 600, they're putting their stops where? $1.50, $2 below. Everybody gets stopped out at that range low. Then you can try and make a move higher. And that doesn't even mean we will reverse, right? It just means, okay, now we actually have maybe some liquidity to maybe make a move higher. But before we didn't, right? And that's where we are right now. We're in complete dead space. So I personally think right now, just buying blindly trying to buy this dip, I think is a rough one. I think you can get some upside this week, but for me, as of now, any upside is just to go lower, based on how the charts are looking. So I'd be very careful buying dips on names this week. If you are, just make sure you have a strategy with it, not throwing in your whole account on the first dip you see. You got to take it slow. You got to have real spots that you're looking at, not just like, oh my God, this name's down this much, I need to add, right? Like, no, you need to have specific spots that you're looking at, right? And be like, okay, when we get here, I'm gonna take a shot with some, right? And then, if we keep dropping, I'm gonna take a shot a little, maybe a little heavier here, right? And you take it slow, because we've seen what these markets can turn into, man. And I'm not this big bad bear, but I'm also not gonna buy the first big dip in the market that we see, especially with bigger names in my long term. It's just not worth it. So just please think about that when you're buying dips, guys. Um, it's can be tough out there. You don't want to keep buying, and then finally be right, and you've lost basically all your money trying to buy the bottom.
Mm.
So just be careful. But I'm loving to see the dips in some of these names because I will be looking to add to some stuff, but I got to take it slow because I'm never too trustworthy of it. You got anything else you're looking at, Shy? I'm not really looking at too many names right now. I'm keeping my eyes on the Nasdaq, Tesla and Coin pretty much. I talked about Coin a little bit. Got wrecked on Friday, and now we're again like Coin. I wasn't really expecting a big bounce until when? Until we took that range low at 240.77. Now that we've taken that low, doesn't even mean we're going to reverse. But now I know like the bigger dogs in the market are looking at this going, okay, this is now we can potentially buy this hitting this range low, right? But if not, I mean, as of now, I've seen continued displacement to the downside. Nothing really showing me that I'd want to buy the dip on coin quite yet, but at great prices here. Tesla kind of similar. We were looking good last week for me, but coming in a little more on Friday and breaking through some key levels, I need to see more before I'm really bulled up. But you got anything else, Shy? You're looking at?
No, I mean, This is not a good Monday. I'm seeing the
Yeah.
market. It's not. So you guys have to be patient. I'm not. 2021, guys. Just remember 2021. If you were slow with your DCA, that pullback. I'm not saying this is going to be the same pullback. It's a different liquidity type of market. There's different reasons, but I, I even me, like I would feel tilted if I used up all my cash position and my stocks keep going down even more of a sale and I can't add any more
You
because like
feel
I'm dry.
exposed. I
Yeah,
feel like I walked outside without pants on. That's what it feels like
that's
when you do
exactly what it
that.
feels
That's
like.
literally the same
Hmm.
feeling you get when you put that much risk on your account. You just feel so overexposed to every. It's just not. It's a horrible feeling. And then you can't sleep at night. It's not even fun, right? You're up all night. Every earnings report, you're sitting there. Oh my god, like it's just not even worth it, man. It's crazy. So yeah, Shy, but if you have anything else to share with the audience before we wrap up, feel free. Again, I'm pretty bearish on the market, guys. If we get a bounce on NQ to that 871.75, great. I'm still pretty bearish, unless we really get some aggression this week through that 871 back into that 22,000. Then I might change my thoughts. But as of now, I mean, market's telling me to be bearish. I'm bearish. So, any more thoughts, Shy?
No, don't overexpose yourself. Have that dry powder because VIX is even at 30. It's not even at 20.
Facts.
It's There could be more fear in the market. So be slow with your DCAs. And yeah, be safe out there, guys. I really don't think the market's gonna do too much before Wednesday, but
Yeah.
get some R&R, get an action plan on if Nvidia doesn't deliver, market is gonna pull back 2 or 3% one day. Know exactly what names you want exposure in, like just know it, and have that plan ready because I don't know if you notice, like when the VIX is like exploding pre-market or after hours, it generally gets scooped up pretty quickly at the open. And a lot of people miss their chance on getting its names because they're trying to figure out what
I
to
missed
add
such a good
when.
buy last week. I bought it all late. I missed a great buy on END because I was just too slow.
So have that plan ready because you want to capitalize it ASAP, and then you can see it wherever move it goes. But just be ready, be prepared, and be level-headed.
Yep, I agree. Well, everybody enjoy the morning. Trade safe, and we'll see everybody bright and early in the morning. Make sure you're liking and subscribing on the Stock Twitch channel. And yeah, enjoy the day, guys.
Jeez, Palantir's down 8% now.